for those details as well. Well, now let's move on and get to the big market and economy conversation of the day. And we have Nilesh Shah, MD of Kotak Mahindra Asset Management, joining in. A slightly special day. Nilesh, thanks so much for taking out the time this afternoon. We wanted to bring you in because it is a special day. The country is celebrating Prime Minister Modi's 75th birthday. And it's been a lot of stock taking, right? We're all looking at what the last 10 years have meant for the economy, for the market, and more importantly, what the next few years are going to bring. So let me actually start right there. A lot has been thrown at us, right? From COVID to, of course, the tariff issue to wars. Yet the market and the economy largely has been resilient. So, how would you sum up the government's response so far? And if you were to make one wish, to the Prime Minister on his birthday today for any future reforms or future steps, what would that wish be?
So, Surbi, undoubtedly, India has improved its ranking in global GDP order. We were 10th largest economy in 2014. Today, we are 4th largest economy and well on our way to become 3rd largest economy. Never before in a decade, India has progressed so much. So all credit goes to Government of India as well as citizens of India. One biggest driver for this, and there are multiple things, but one biggest thing from an economy point of view is path of fiscal prudence. India is the only major economy in the entire world whose debt to GDP ratio has come down between subprime crisis in 2008 and today, post-COVID crisis. No other country has resulted into deleveraging. India is the only country which is deleveraged. Households of India and corporate India has contributed in deleveraging. Government of India to fund COVID borrowing has leveraged itself. But collectively, we have deleveraged, which no other country in the world has done. This path of fiscal prudence, which is courtesy the Prime Minister, is probably one of the reasons why, despite so many things being thrown at us, our economy and markets have been resilient. And one request to the Prime Minister to ensure that the Viksit Bharat is achieved earlier rather than later will be improving ease of doing business. Surbi, today our entrepreneur is like Kalyug ka Abhimanyu. They are born into Chakravyu. And not only they fight with Kauravs, which is markets and ups and downs and volatilities, many a times they fight with Pandav because there are so much of compliance burden. So many things we can ease. We can free our Abhimanyu to fight Kaurav. And what has not happened in Mahabharata, where Abhimanyu couldn't break the Chakravyu, under Honorable Prime Minister's leadership with ease of doing business and investment, I'm sure our entrepreneurs will break the Chakravyu to make Bharat Viksit Bharat.
Oh, very well put, Nilesh. And may as you're saying, the Kalyug Abhimanyu, may he go on to conquer the world, right? Because that's where the focus has been. I mean, the government's focus, Prime Minister's focus on schemes like, Atmanirbhar Bharat, the PLI schemes, Make in India, manufacturing, China +1. So a lot has been happening for India Inc.
Indeed, Soumya Ghosh, Group Chief Economic Advisor, State Bank of India, is also joining in. Soumya, Modi has done a lot, right, as Surbi was pointing out. But the question is, what's the roadmap for the next few years, from 2024 to 2029? In terms of reforms, what is it that we can realistically expect? We're already seeing a tilt towards consumption over capex. It's going to be balanced, but there is that bias towards consumption now, a recovery at the mass end. What would your, the roadmap be now, as we celebrate Modi at 75?
Thank you. I think while we must celebrate the journey which India had in the last decade, I think in terms of the future, India, we have done a lot of big ticket reforms in the last decade. The GST is one of the examples, the insolvency and bankruptcy code, the corporate tax cuts. So all of this has been great reforms. But one thing which we need to take it forward, I think in the next 5 to 10 years, I think the continued focus by the government under the leadership of Honorable Prime Minister Modi in terms of improving the ease of living for the common individuals and the business. In terms of the ease of living, I think the time has possibly come also to expand into areas of improving the lives of common Indian by the improvement in urban infrastructure. Because in the Indian context, you know that we have a government at the local level. So we need to ensure that the urban infrastructure also improves significantly along with the overall infrastructure which the government is building. And the second reform, if we can do in the agricultural sector, we have been trying to reform the agricultural sector. We have tried to move away from the agriculture to the allied activities in terms of the value chain. Maybe we can do some more in terms of the price discovery. There are other reforms also, but at this point of time, I think improving the lives of the common Indian through the improvement in urban infrastructure and possibly some reforms in the agricultural sector could be the next 5 to 10 years of the reform mantra.
Okay, all right. So reforms in agriculture, maybe better quality of life for citizens and infrastructure. We couldn't agree more, Soumya, especially being here in Mumbai. Really looking for better infrastructure in the coming years. Soumya, just on the point of the economy from here on and how a lot of global investors are looking at India as well. Do you think the bulk of the sting of it in terms of US tariffs, etc., you think the bulk of it has been mitigated with what we've seen on the GST front, the fact that there is still easing, and you tell us, I mean, maybe you expect more from the RBI as well. So, I mean, have we nicely offset the tariff impact so far?
Yes, I think that is also one important part. And another reform which I just forgot, I think that is also a part of the reform, is basically also to get rid of the government is doing in terms of the various regulations which the government is actually doing, I mean, to make it a more simplified and a rule-based regulation. But now, having said that, in terms of the overall uncertainty, I think on a lighter note, the certainty and uncertainty has possibly become the norm of rulemaking today. But I see positivity in all the uncertainty, which is looming amount. Hopefully, if the trade deal comes through and the GST reform which the government has done, I think no country in the world has seen a tax structure where all 28 states and the center goes together. And that's an element of the best example of cooperative federalism. So my sense is that once a trade deal comes through, and given the consumption boost and also the income tax exemptions, I think the private investment, which somehow has not led to the momentum, will pick up the momentum and hopefully will be able to achieve the growth rate of 6.5 to 7% plus on a consistent basis. Because I think the objective right now is to grow at 7% on a consistent basis. So we all are on one together in our journey towards a developed economy by 2047.
Soumya, thank you very much for joining in with your views, weighing in. And we request Nilesh to just stay on. We'll come back and talk to you about the markets. For now, slip into a break with the... Welcome back. Up about 85 points on the Nifty. So building on to the gains from yesterday, there was a minor dip about 30 minutes back, but the markets are moving on. That dip has been bought into. Let's see what happens in the last 30 minutes. The big event to watch will be the two-day FOMC meet, which concludes. It's pretty much a given, perhaps, that a 25 basis points rate cut is coming. Markets have priced it in. But the question is pace of easing thereafter for the next 12 months. So investor focus will squarely be on that. We're in conversation with Nilesh Shah. Nilesh, we were just discussing the markets, and you said that once perhaps this trade deal, we get any positive sound bites, and the trade deal is out of the way, markets could see a bit of a leg up from here on. What should we expect, considering markets haven't done anything for the last 12, 13 months now? It's been very sideways. What is your own view for the next 12 months for our markets?
So our markets have done exceptionally well over the last 5 years post-COVID, and there is a need for consolidation. Markets are driven by three things: fundamentals, flows, and sentiment. If tariff deal works out, sentiments will become positive. Fundamentally, we are trading at reasonable premium to our emerging market peers. So re-rating of our market looks difficult. Whatever will be the earnings growth will probably result into return to the investors. And earnings growth right now looks like for the coming years in the trajectory of high single digit to low double digit. What can move the market is the flow. And this is where there is a tug of war going on. FPIs, by and large, have been sellers over last couple of years. They are underweight India. And they are likely to tell domestic investors that, you are sitting in a wrong train. You should be booking profit. Indian markets looks expensive. On the other hand, domestic investors have continued to buy not only what FPIs have sold, but also what has come by way of primary supply through promoter selling, private equity exit, and sometimes even global companies coming in, booking profit here. By and large, they are overweight India. And at this point of time, they look like that their buying will continue. This tug of war is going to determine what happens in the market. If FPIs convince domestic investors that our markets are expensive, then there will be slightly longer period of consolidation. If domestic investors can convince FPIs that you have missed the train, and India is a market where exit is easy, but entry will be difficult, then who knows, we could see a rally. So from a fundamental point of view, you need to moderate your return expectations to earnings growth, but flows can surprise on either side.
Well, Nilesh, good to see you win on this big day, our Prime Minister's birthday. And, over the last 11 years or so, the equity cult that's been developed in India is something that really stands out, right? The kind of flows that we're getting on a monthly basis, the evolution that we're seeing. I recall, when you told Surbhi a month or so ago that keep in mind, this month the flows are going to be rock solid when we were quizzing you about it. And bang on. So good on you on that. Do you see that the flows are as strong as of now? And also, if you could give us a sense about the liquidity that the industry is sitting on. I think they were sitting on ample liquidity, 5.5% or thereabouts. Break it down for us.
So, Nigel, this month also flows looks reasonably strong. We have to break these flows in three compartments. One is the SIP flow. By and large, that is continuing well. Now, of course, there are people who will try to talk about net SIP without understanding that as the SIP AUM grows, some people will book profit and hence the SIP flows will fluctuate. The addition on SIP looks fairly strong. The second thing is the lump sum flows. By and large, retail investors, thanks to their mutual fund distributors and advisors, have developed habit of buying on correction and selling on rise or booking profit whenever they believe market has risen. So this SIP plus lump sum flows continuously plays a part in regular flows to the market. The third flows which we have started witnessing is overseas investors now investing via various structure, including Gift City. It's a small beginning, but who knows where this can lead. So overall flow-wise, we still believe there is reasonable amount of flow. At Kotak Mutual Fund, we don't take any cash call. We believe our clients are doing their asset allocation and they have given us mandate to invest into equity market and trying our best to outperform benchmark indices. Of course, there are other fund houses who take a different view. Now, collectively, mutual funds will be sitting somewhere around 4 to 5% of their AUM in cash. But Nigel, we have also created a product category called Balance Advantage Fund, Asset Allocation Fund. As valuations become cheap, we can increase equity allocation in this fund. As valuation becomes expensive, we can sell and book profit. The combined cash availability in asset allocation and balance advantage fund will be somewhere around 1 lakh crore. So not only mutual fund industry is sitting on a 4 to 5% cash in their pure equity fund, they also are sitting on about a 1 lakh crore space in case FPIs becomes desperate sellers and start selling at a cheaper and cheaper valuation.
Okay, so it is that domestic flow story. It's been like the lighthouse shining on troubled waters or dark waters. Every time there's market volatility or the foreigners are selling, it's that lighthouse, glowing bright with retail investors coming to the market. And I mean, now there's a new category, Nilesh, SIF the new 10 lakh rupee category. And maybe next time you're with us, we'll talk about that as well and see, how that can add more meaningful money to the market, perhaps. Thank you so much for joining in. Great conversation as always, and you have a great rest of the day. That's Nilesh Shah.